Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on depreciation. This is lecture number 15 and you can find the other lectures on the chapter Depreciation Accounting in the playlist section of the channel. On 1st April 2002, the machinery account in the books of a firm stood at rupees 85,000. A part of the machinery whose book value on 1st April 2002 was rupees 12,000 was disposed of at rupees 5,800 on 30th September 2002 in part exchange for a new machine costing rupees 10,400. A net invoice of rupees 4,600 was passed through the purchase day book. Rupees 600 paid to workmen for installation of the new machine was debited to wages account. The firm charges depreciation on machinery at the rate of 5% per annum on diminishing balance method. Give the adjustment entries that are to be passed in respect of the above before preparing final account for the year ended 31st March 2003. Also show machinery account and asset disposal account. So first of all, we will prepare the working note to calculate the amount of depreciation and the amount of loss that was incurred on the disposal of the machine. So it is given in the question that on 1st April 2002, a machine costing rupees 12,000 was disposed of on 30th September 2002. So I am denoting this amount of 12,000 as M1 and the balancing figure as M2 for 73,000. So total book value of the machine, this is the book value, or I can say it as written down value of the machine on 1st April 2002 was 85,000. Now I have made two parts of it because one part will be sold out on 30th September 2002. So the part of the machine that will be sold out on 30th September, I have termed it as M1 and the balancing figure for 73,000 as M2. So I have to charge depreciation. So I am charging here a depreciation at the rate of 5% on 30th September 2002. So this will be rupees 300. So if you charge depreciation 12,000 into 5%, you multiply it for 6 months, you will get 300. So what is the written down value of the machine on 30th September 2002? This is 11,700. Now this machine was sold out. Sale value was rupees 5,800. So there was a loss on sale of machine for rupees 5,900. Again on 30th September 2002, another machine was purchased for rupees 10,400 and rupees 600 was paid for installation of the machine. So the total cost of machine on 30th September 2002 was rupees 11,000. Now on 31st March 2003, depreciation at the rate of 5% will be charged on M2 and M3. So depreciation for the whole year will be charged on M2 and this amount will be 3,650 because 5% of 73,000 is 3,650 and on M3 depreciation will be charged for 6 months. So you will get 275. So how I arrived at 3,650 for I am showing this small calculation 73,000 into 5% you will get 3,650 and 11,000 into 5% for 6 months you will get 275. So for your understanding I have shown you the small calculation. So the written down value of the machine on 1st April 2003 is 69,350 and 10,725. So if you add up these two, you will get 80,075 and the depreciation for the year on M2 and M3, if you add up these two, you will get 3,925. Now you have to pass the journal entry for the rectification of the mistake that has been made. So installation charge has been debited to wages account. So you have to pass the journal entry machinery account to debit rupees 600 to wages account. Another journal entry was passed that the purchase of machinery was debited to purchase account. So you need to rectify that mistake because you are preparing the final account for the year ended 31st March 2003. So machinery account will be debited for rupees 10,400 and credit will be given to purchase account for rupees 4,600. So how you have arrived at this figure? 4,600 is given in the question. That is 10,400 was the purchase cost and less the sale value of the old machinery for rupees 5,800. So only for 4,600 was passed and it was debited to purchase account. So machinery account debit 10,400 to purchase account 4,600 to bank account 5,800. So this is the rectification journal that you have to pass when you are preparing the final account of the concern. So now it's time to prepare the machinery account and the machinery disposal account. So I have prepared the structure of the machinery account and the asset disposal account. So on 1st April 2002, the balance of machinery was for 85,000. Now on 30th September 2002, machinery the book value of which was 12,000 was disposed of. So I am writing here by asset disposal account 12,000. So in asset disposal account I have to write to machinery account 12,000 and on 30th September 2002 depreciation was charged for rupees 300. Then this was sold for 5,800 and the loss that was incurred on disposal of the machinery will be debited to profit and loss account. So this way I have completed the asset disposal account. Now on 30th September 2002 a machinery was purchased for rupees 10,400 and on the same day installation charge was paid for rupees 600. So I have written here in machinery account to bank 10,400. This is the cost of purchase of the machinery and the installation charge of 600 to bank. So machinery account debit to bank. Now on 31st March 2003 depreciation will be charged on the M2 and M3. So what was the amount of depreciation that was charged? It was 3,925. So in depreciation I can write 3,925 and the written down value of the two machines M2 and M3, this is the balancing figure, basically 80,075. So this way I have completed preparing the machinery account and machinery disposal account or the asset disposal account. So please have a look at it. Hope all the students have written down the question with solution and have followed the way that I have adopted to solve the problem. If you find any difficulty in understanding, feel free to contact me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.